Welcome to Trading Lounge and the US Indices. We'll look at the S&P and the NASDAQ. And with the S&P here on this daily chart, we know that we're tracking two counts, one bearish and one bullish. And we can see that the 2,800 currently is a nice support for this market. And sure, it can push up higher, and we'll look at that, and we'll look at the triggers that can take that higher. But we also need to be prepared that the current little move, the retest here is fantastic for a bullish move. The move up through here now is meeting supply. So if it's going to fail, this is where it's going to fail from, and then move down from this point. So we still need the bullish and the bearish strategies to implement here. So let's go in and have a look at this. So on the daily chart here, as you know, we've got wave 3 here, A wave here, B wave all the way up here in three waves of minute degree of A and B and C, and then 5 smaller waves within that structure. And if that's the case and that top is in play, then we come down as 1 and 2 and 3 and 4. So we'll be able to rule out this bearish count if we make a new high above here now. So that's good news. It's just basically being the Sherlock Holmes and eliminating the evidence as it presents itself. So a new high above here would rule out this whole bearish count here. But while we've got it here, let's just go in and have a look at the bearish count in the 4-hour chart here. So let me just open this up here. So the way that we're looking at it currently is that we're looking at it as 1 and 2 here, and 3 here, and 4 here, and 5 here for wave 1, and then the move back up here for wave 2 and ABC. So in a nutshell, that top that you see here should stay in place if that's going to be the bearish move now, because that's also above the 61.8% mark from that high to that low there. I think the 61 point comes in roughly about that previous high here. And also too, we've got this number here too, the 2850. So the 50 is the midpoint in the trading levels. So the trading levels from the 2800 here is a minor level, and then we've got all the sub levels. So 1, 2 and 3 is group 1, the midpoint. 50, then group 2, 65, 72 and 80. And so the midpoint is critical here. Support on the midpoint here would help us instigate long trade. So a nice tested support on that would help would initiate long trades. And also too, while we're just sort of looking at this here with group 1 here, the 1, 2 and 3, or 10, 20 and 30, normally when we find the number 2 here, the 2820, the number 2 within group 1, if that becomes the resistance, the tested resistance, then you'll also know too that we're in bearish mode from that point. So the 5 and the 2 on the outset of this will be catalysts in helping you decide the direction. But they must be, the 50 must be tested support, and the 2 here must be tested resistance. So that's the outside picture for being long or short. We'll go in and investigate this in a smaller time frame in terms of wave 1 hour chart here, I think. So here, 1 hour chart. So we can look at all of this now as wave 1 here, wave 2 here, wave 3, an A and a B and a C for wave 4 here, and then down for wave 5 of wave 1. We can look at this as an A and a B, and then 5 waves up for the C wave here for wave 2. And as I mentioned, it has pulled up higher than the 61.8%, but the 61.8% sometimes is, spot on and accurate, and it's hauntingly so. And other times we'll be looking at anywhere from 40% to 80% in retracement levels. So but here we can see that the 61.8% is at the old highs here, and it has moved through that. Not a big deal, but just worth pointing out. And yeah, so we'll look at this on an intraday basis in a tick chart in a moment after we look at the bullish count as well. So I mentioned here about group 1 and about the 2820 becoming the retested resistance here. If that's the case, then, but to also back that up is from this low to this high here, that's the 61.8% back this way as well. So if that becomes the retested resistance, then you need to be on the short side from there. Okay. Otherwise, on the long side, we'd be looking for a move like that. So normally we would see the arrival up here, then the reaction in 3 waves, so that can come back further. We'll have a look at that on the tick chart in a moment. But then we'd want to see a push up here. Once we've got the push up here, it's not to trade the breakout of breakout above the 2850. It's to allow it to collapse again and find its feet, support, demand, and then push up, and using any highs that we've got in this side as triggers, or a nice support back over here on the midpoint, the 50 here. In the bullish move, we can count this down as an A wave and a B wave and a C wave, and that's okay too, because when we look at the NASDAQ, you'll see that it is 3 waves down. Yeah, there's cases, there's good cause for both of them. I don't want to get into, I mean, I don't mind arguing the case, but we don't want to get lost in the case. We need that the setups are more important than anything else, because you have to separate from being a trader to an analyst. So on the bullish side of this market, we'll look at that here. So we're looking at wave 4 being in low down here, or we can have wave 4 here too as a D wave. Triangles of A and a B and a C and a D and an E wave here, and then up for 1 here and back for 2 here, and this can count like this here. So in this case here, wave 1 and wave 2 here, wave 1 here, wave 2 here, and then pushing up higher from that point. So if we look at this on the 2-hour chart here, then it would look like this here. We'd have to label this an A wave, a B wave, and a C wave here, but it's not going to trigger anything. We've got our first trigger above here, and then we want a nice tested support on 2850 area here. Okay, so let's go in now and have a little look at this particular pattern here. Yeah, so just on the tick chart, we'll probably see both counts here on the tick chart. So just how much have I got here? We're really just interested in this move here. So we know that the move down here can be wave 1 on the bearish move, or wave 2 here with wave C coming in through here. So we can label this. We can label it in both ways actually. So that's what I should do. I'll just copy that text. We can have that as a A and a B. Sorry about that, not quite true. That would be here. So an A wave to here, an A and a B and a C to here, and then this C wave here, which I just really want to copy, and that can go up here with wave 1 and 2 and 3 and 4 and 5. Not very happy with that, because wave 3 here looks a little bit short compared to wave 1 here, but it does have a 5-wave sequence to that point. So we can still just label that anyway here. Let me just get that in here. Wave 3, 4, and 5 into here for wave C of wave 2. So we don't really want to see the market going any higher than that. But in this, at the same time, we can also label this here as wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 coming up here. And then that would be, if we take wave 2 here up to wave 3 here, then the 38.2% retracement level would be here to get these things working. So that can come into that space there, come into here, and then move up from that point there. So I can't draw on a tick chart on this side over here. I can put characters, but I can't draw. So I think the good thing here is that, the easy thing here is that if you, this little move down here is in 5 waves here, so that's like a little A wave or wave 1. If you wanted to short that and take a risk, then you can short that there. So if I just copy that, but that would be much higher risk, but we'll put that there. and then of course the stop would go, well, let's keep the stop out of the way up here somewhere, just turn that rather than just above that little guy. We'll probably get a, this will be 5 wave, 1, 2, 3, 4, 5 coming down, then A wave, a B wave, and a C wave back up, and then down from that point. But it may only come down to the 4th wave here and then go back up. So that's the trap there. But the long trade would be with this on support here. So if I can just draw over here, so we've got the top here, and then we come down for an A wave, a B wave, and a C wave for wave 4. I'll just copy that here so we know what we're doing. Wave 4 here, and then we would see wave 5 move up here. So we can look at wave 5 here, and then we would look for an A and a B and a C wave a bit deeper. So that would bring us into, if we take this low here from wave 1, come up to wave 5, you can adjust that accordingly here. But you can see that in this instance here, we could end up being at a 50-60% retracement level back here. Okay, so if you see that 5th wave come in, then expect the market back lower here to the 30, and then it will push up. So you want to see if you can see 3 waves in that space here, these 3 waves in that space here, and then go in and look for buying opportunities on this side, but more so on the 2850 at that particular point. The NASDAQ tech stocks, so well, we're here on the hourly chart. We'll just use this then. So in this instance here, you can see that the move down here is not in 5 waves. So we can get 5 waves in terms of the SP 500, but in this case here it counts nicely as an A wave, a B wave, and a C wave, the way that we counted it last time. The only problem with this ABC here is that the C wave here is actually sharper than wave A here, because in a correction, when the market comes up and has the A, it's normally the A wave is sharp, and then the B wave, and then the C wave is on a bit more of an angle. But to see the C wave like this here would put it in bearish mode. So if we have to count this as a bearish mode here, but also while we're here, if that top gets taken out here, we need to be long here. And we're already short here from this green bar here. So you can just bring that down into break even now, or bring it in on top here. Just if this moves up through here, then take the shorts out and just go long from that point. But otherwise, those shorts can be just on top here now, and we can be short from there. So anyway, on the bullish side, you can see the bullish side as an A and a B and a C. Not too bad, not too shabby, but the only problem is this is sharp down here. So if we were counting the other way down, we'd have to count wave 1 here, wave 2 here, then wave 1 over here, and then wave 2 to here, and then we look at wave 3 coming down here further. This little move up through here, that can also be counted, we'll need to look at that as, if I copy that, as wave 1 in here, and then having this back here this is the 61.8% mark here as wave 2 here. So we could say that, you know, we would need to see on a bullish, would need to see that go straight up from there. Okay, if you see the market come down here further, even deeper in here, then you know it's going to be bearish here. So in fact, what we can do is we can gravitate to the closest largest number, which will be the 73.50, and you can expect to bounce off that. All right, so if that comes down to here, then you're going to see a 3-wave bounce back up here. So there's no need to go long or short just yet, but support on 74, you want to be long, and resistance here, you want to be adding to short trades at that particular point there as well. Okay, so let's copy this one here. So I'll just put it below that because you want it as resistance, but any move down here is going to bounce off that there first. Okay, so if it bounces off and then comes through, then, and of course that will resist under there, and there'll also be another bounce off here as well, but it'll be something that you'll need to accommodate. And then when this if the 73 becomes the resistance, then you look to add to the short positions under there as well. Okay, well, look, that's it. So, we've had these long and these bullish and bearish moves on the NASDAQ and the S&P 500, but they're getting to a point now where one of them is going to prevail, and we need to be on the right side at the right time. So don't be fixed, just look for the setups and manage the risk. Thanks for tuning in, much appreciated. Cheers.